Hi again, everyone. Good afternoon. Hope you are all doing great. Thank you for being here this week. And thank you actually for being here every week. It's really what gives us motivation to do this. And today is the last session of the month. So it's the last session on stage 3. And next week we are going to start on stage 4. So if you have any question about this stage we are in, you can just ask it at the end of the session. We have a 10 minutes question and answers. So you can ask any questions you have for the first 3 stages. And next week we are going to start on the next stage. And also, if I want to introduce our training session to anyone you know, if to a friend or I don't know, to your community, you can, always send their emails to me, to my email, so I can send them an invitation every week, or you can just share the link that you have with them for the training. So we really would be happy if you wanted to, introduce us to your friends, your college classmates, everyone you think that it's beneficial for them. So thank you again for being here. And as I say, we have a 10 minutes question and answer session before, after the session. Sorry, I feel a little less energy today. Okay, over to you, Morlai. Sorry, thank you everyone.
Thank you, Sapede. Good afternoon, good evening, wherever you're calling from. Yeah, it's a pleasure to see you all. If you can turn your camera on, please do. Yeah, it just gives more energy. Yes, let's spread the love and the energy. If you can, very, very important to do. Yeah, but it's always good to see you guys. Always a pleasure, to be with you. To share with you. And as you know, this is every Thursday. We come down here, to talk about this subject that is so close to our hearts. Yes, we as accountants, um, that's what we do. You know, we love what we do, to serve and to serve our clients, in a way that there is no reservation. Yes, but we need to be equipped, to serve them, yeah, in that manner. Yeah, okay. Um, so every Thursday we take the opportunity to come, stop, and then, well, just listen to me or, yeah, some other stuff that is going on. So I really appreciate that, because you guys are stopping everything that you're doing with your business, whatever it is that you're doing, and come and spend an hour with us. So I want to appreciate that. Yes. So tap yourself in the back for doing that. Yes. Well, I hope that when you come down here, you take something with you, every week. Yeah. It's not just to come and listen. Yeah. Please go and apply that, to your situation that you find yourself. Yeah. And if you think you need more clarification, I'm happy. Come back again. Let's talk about it, guys. Yes. So it's not just to come and listen. Yeah. It's to go and apply it. Application. Yeah. Okay. You hear me talking about closing the gap between, yes, this knowing and doing. Yes. So there's the knowing doing gap. We know so much, yes, but we do very little with what we know. So that gap that exists, yeah, we need to close it. And to close that gap is all about doing, get the right attitude to do it. So thank you again. So as always, the Moracle Accountancy Formula, yes, and this formula, and I hope you guys by now, yes, you begin to paint this picture. Yes, like I always say to you guys, paint that picture. When you say you are in the finance function, Yes, what is it, that you actually, dare to do? That picture, it has to be clear in your mind. Yes, that is like your goal. Yeah, to become an accountant in the finance function, or if you're in practice, yes, and you're serving your client, you want to paint that picture. Those 6 stages in the Moracle Accountancy Formula, in the way we have thought about it, 6 stages. Yes, I hope by now you begin to paint that picture, even if you cannot explain it. But I'm just saying to you guys, paint that picture first of all. Yes, paint that picture. Yes, and then you fall in love with that picture. Seriously. Yes, and we have it in your own saying. Yes, locally say, yeah, you eat first with your eyes. Yes, so you see food that is presented to you. So you eat first with your eyes. Yes. So it's the way it's presented, oh my goodness, I can't wait, you know. But you paint that picture, straight away before you even test it. You understand? So even if you don't know, what the Moracle Accountancy Formula is all about, detail, I'm just saying to you, paint that picture. And as simple as stage 1, what is it called? Yes. Not well, I think that is what is called the right name. Call it the right name. Yeah, stage 2, what is it called? Yes. So until you get to stage number 6. And if you can do that, yes, I'm advising you guys, please do that. Yeah, because it will help you. Yes. Sooner or later, you find out that, it becomes second nature. Yeah, you begin to see sense, yeah, in what you're saying. Yeah, okay. So here comes our Moracle Accountancy Formula. Stage 1 is Management Information Systems. Stage 2, Management Accounts and Value Added. Stage number 3, the Statutory Accounts and Scheduling. This is the topic that we talk about, in this month. So we'll spend a little bit more detail today. Yes, I know today is the last Thursday of this month. So a little bit more statutory accounts. We'll talk about that and the scheduling. Yeah. Stage number 4 is taxation. Stage number 5 is reporting. And stage number 6 is filing. Okay. So today at work, yeah, one of the stages that we're focusing on is number 6. Yes. We're talking about filing. Yes. So me and the team, well, which client do we need to file? File with Companies House, file with HMRC, file with Charity Commission. Which ones? Yes. Because just think about it. If we've done all this good work in the course of the year, we done stage 1, we done stage 2, we done stage 3, we done stage 4, stage 5, and then number 6, we drop the ball there. We don't file. Those accounts are late or they are filed incorrectly. You can imagine, the kind of issue and problem, and all sorts of things that will come up. Yes, okay. But today, in practice, today, all the clients that we need to file today, we're saying, well, this is the last day. Why? Because tomorrow is a holiday. Yeah, Saturday, no, there's no work. Sunday, there's no work. Yes, okay. And Monday is also an holiday. Okay, wow. Can't wait, to relax. Yeah, so today we are focusing on the last, go through the checklist, which clients that we need to focus on filing, making sure those accounts are filed. So the picture I'm saying to you guys, paint that picture. Yes. Stage number 1, yeah, management information systems. Why do we call it management information systems here? It's because this stage is where all the different systems are coming together. Yes. And when it's a system, there's a lot of systems, that we come across, yeah, in the finance function. Yeah. Sales ledger system, purchase ledger system. Yes. The payroll system, VAT system. Yes. There's a lot of different systems. Bank and cash system. Yeah. Systems and systems and systems. CRM. Yes. And you got all sorts of the database, DMS. Yeah, all of these different systems are coming together in stage number 1. Yes, what are we aiming to do here? Yeah, is to capture that data, the financial data of that company. Yes, to record that data in a certain way analyze it in a certain way, and reconcile. That's why we have all the systems coming together. Yes. The banks are connected to the accounting system, either QuickBooks or Xero or whatever system you're using. Yes. The payroll software, the system is connected to the accounting, so they are talking. So when you prepare your payroll, yes, automatically a journal, yeah, is now posted into the accounting system automatically for you. So that integration exists. Your bank, because it's connected to the accounting system, so those transactions are downloaded, on an ongoing basis. Yes. Your sales ledger. Say, for example, if you have your CRM system, is connected to the accounting system, as information is captured in the CRM system, is now, triggered, into the accounting or posted into the accounting system. So if it's a sales invoice that has been raised, in the CRM system outside of QuickBooks or Xero, yeah, when that transaction or invoice is posted and sent to the customer, that information is posted automatically, yeah, into the accounting system. So you got your double entry system working. Yes. When you receive a supplier invoice from a supplier, yeah, you come through a system where you will get what you call it now, invoice recognition, software, whether it is Receipt Bank or it's all the different systems that are out there, that you will actually, pull that invoice, yeah, it captures the information, and then post it, for you into the accounting system. So when you get to the accounting system, you review it and then post it. Yeah. So all these systems, yeah, are coming together and they have to work. They have to be connected. And that's why we call this system, this phase, stage number 1, the management information system. Yeah, you will hear other people say, well, oh, the first stage here, oh, this is like the bookkeeping, isn't it? Yeah, so you do your bookkeeping. Yes, that's the understanding. But for us, it's beyond bookkeeping. Because, a bookkeeper, I'm not saying I'm trying to downgrade bookkeeping or bookkeepers, but what they do, I'm telling you, in my, 30 years or so experience, yes, required a little bit more. We need more than just bookkeeping. Yeah, just recording transaction, and then reconcile it and say, well, okay, I've done with this stage, so now somebody else to do it. No, sorry, it's more than that for us. Yeah, because this stage, we pay so much attention to this stage that, guys, you got to know so much about this client. Because what we are doing here as an accountant, in Moracle, is all about serving and serving those clients, without any reservation. We have to be emotionally involved, with those clients. We need to know them inside out. Yeah, it's not just about the business. Even with their personal, activities, we need to. Because you know what? They will have, a company, yeah, a director in that company, yeah, but there are other things that we need to know. For example, it could be that, they've got, other, investment activities. It could be that they have other, strategies, that they are dealing with, that actually directly or indirectly link to this business that we are serving. If we don't understand all of this, we don't get, emotionally involved with these guys, for them to trust us, to tell us about what they're doing, then we're just doing half of, the service. We're just dealing with them halfway. Yeah, we don't get the full picture. And no wonder why sometimes, you got so many arguments, oh, well, you did not tell me this. Oh, no, I didn't know this. I was expecting that you would know this. Yes. And also, as accountants, we should not be in that state. Yeah, we should know everything about our client. Yes. And that's why we said it's beyond just bookkeeping, just doing data entry, and then forget about it. So we focus more on background information. So the background information, as we talk about this, over and over and over. Yes, even now, I'm so much convinced now, the new interns who are coming in, and I'm saying to them, you got to be patient, you understand? And this is a test for you guys, because they're coming in expecting to come and post after they've done QuickBooks certification. All they want to do is just to post. Oh, post it. I want to post. But then we're holding them and saying, no, sorry, you're not ready to post yet. Why? Because you don't know enough about this client. You are not emotionally invested or emotionally involved in this business. Yeah, for you to begin to now, when you're posting, you are thinking about this client. You understand? To post correct. And I'm saying to them, you're not allowed to guess, at this stage, no guessing is allowed. Yeah. You're going to make sure you got the evidence. You got to make sure you got things correct. Yeah. It's got to be. Yes. Okay. When you get down to stage number 3, you will hear me talking about, here, accounts are full of assumptions, estimates, and judgment. Are you with me? Financial statements. Yes. That's why they call that. They are full of judgment, estimates, and assumptions. So even the accounting policy, yeah, for every account, you will see those are stated down there. Yeah. But in stage number 1, you're not allowed to estimate judgments and then all of this. No, sorry, I guess. No, sorry, you're not allowed to guess. And I want guys to understand that. You cannot start posting until you really understand, the background, about the client that you're working on. Yes. Okay. So that's why we call this system or this stage management information system. Yeah. So it's beyond bookkeeping. Yes. Much, much more. And I'm telling you, when you master this and you get this right, look at what's going to happen. Stage number 2, the management accounts, and we're talking about a management account that adds value. You understand? It makes it much more easier to produce because all the accounts there, the numbers, even though they are historical data in stage number 1, remember, make a note, it's all historical because you are doing things, in the past. You understand? Okay. So once you reconcile all that information, you produce your trial balance. Yes. And that is going to be in the past. It's historical data. So now, when you're doing management accounting, stage number 2, you feed in information from stage 1, historical data, into stage number 2, historical. Yeah, that's not good enough. Yes, you cannot say that management account, is a management account that adds value. No, because you're taking that information from stage 1. That information that comes from stage 1 is historical. The budget is historical. Yes, the what you call the actual position that you got down there is historical. So that is not good enough, yeah, to produce management account form. But yes, you need that as part and parcel. So now, for you to convert that historical data, yeah, into something that adds value, then you need to go looking forward. Yeah. So now forecasting skills comes in. You need to look outside of the organization. So you now need to now begin to bring in other data that exists outside of this company that you're actually preparing, yeah, the management account for. What is happening in that industry? What is happening in the economy, the global economy? Yes, what is happening with competitors out there? Yes, all that information, you bring that and add it to the historical data that you get from stage number 1. And that is what stage number 2, yeah, means by management accounts that add value. So your profit and loss analysis will be produced. Your balance sheet analysis, will be produced. Your cash flow analysis will be produced. Your KPIs, yes, will be reported upon. You will establish or ascertain, whatever it is that KPI that you're going to be tracking, and then you report on it. Yeah, Google Analytics, yeah, where customers are coming from, people who are interested in your business, yeah, that you get from their interaction online. Yes, Google Analytics. So all this non-financial information would now be brought into this report. And when you do all of this, that is what management accounts that add value means. And when you take care of number 1 and number 2, you do this every month. Any business that applies stage 1 and stage 2, the way we've just described it here, I'm telling you that business is going to, be a successful business. Yes. I'm not saying they're not going to have challenges. Yeah, but I'm telling you, whatever the challenge, that they face, they are going to be able, to deal with those challenges. Yes. Stage 1, think about it. It's the day by day, activity, week by week, month by month. Yes. Stage 1. Yeah. Stage number 2, Yeah, it's a month by month activity. So you do that once every month. Yes? So go back again. Stage number one, every day you're capturing data. The banks are connected to the accounting system. So information is just being, uploaded. Yeah, day by day. Yes, okay. Week by week, activities are happening. Supplier invoices are received, they are posted, they are paid. Customer invoices are being raised. If it's a charity, donation is coming through or grant is coming through. You're posting, you're reconciling, you're paying people. At the end of the month, payroll is done. Yes. At the end of every quarter, VAT is done. Yeah. So you find that, on a day by day basis, information is collected. Yeah. Data is recorded. Yes. It's now analyzed, is now reconciled in stage number one. But stage number two, you do it once every month. Yes. So by the time you get to the end of the year, yes, just think about what you would have done. Yes. That information, yes, or this client that you've been working on, or if you're in the finance office and you've produced this, information, yes, management account, you've seen those management accounts at least 12 times every month. Yeah, management account is produced, it's been discussed, and then advise strategic decision makers, and then you get feedback from them, and then go back again to stage one, and then do whatever it is that needs to be adjusted. Yes, stage one, those accruals, those prepayment, accrued income, deferred income, yeah, depreciation is all happening in stage number one, not stage two, not stage three, stage number one. If you do this, I'm telling you, when you get to stage number three, yes, you just all you gotta do now is just you gotta relax. Yes, and you're not gonna focus on your numbers per se. Yes, that's why stage number three is a statutory accounts. Yes, I go back again. Statutory accounts and scheduling. Statutory means by law. Yes, okay, by law. It says by law you got to do things in a certain way. Accounts are going to be prepared in a certain way. If you are a limited company, yes, then the Companies Act, yeah, kicks in by law. Companies Act, yes, legislation, yeah. If you're a charity, the Charities Act, yes, legislation by law, statutory, yes. You got no choice. You got to do it in a certain way. That's why stage three is saying you got to focus on this. But just think about it. The numbers, yeah, are coming from stage number one. Yes, the numbers that you need to produce those accounts are coming from stage number one. If number one, you've done this every day, every week, every month, yes, and then, it's been reconciled every month. Yeah, all the adjustments, accruals, prepayments, depreciation, every month. You are passing accruals, for new accruals. You're reversing those old accruals. You're passing, new prepayments and reversing those old prepayments. Accrued income, deferred income, depreciation. Every month you've done that in stage number one. Yes. Are you going to be doing that in stage number three? No. Yes. Those numbers, they are coming with, oh my goodness, and it's got some, what you call it now, some helpful one in there. Yeah, saying, done, and I'm ready to go. Yeah, the information that is coming from stage one is going to be in that state. Yeah, saying that, I'm ready to go. Yeah, but when you get information coming from stage one, yes, and he's saying to you, well, hold on, you got to pass, prepayments, accruals, and whatever it is. In stage number three, it's telling us that stage one has not been done properly. Yes, guys? Okay. And this is one thing that differentiates us from so many other, thoughts, process about preparing accounts. Yes. Stage three, yeah, we say focus on the statutory account, the statutory, yes, bit. Yeah, do you understand what section 477 or section 478 means? Do you understand what it means, by FRS 102 if you're preparing charity accounts? Do you understand what that means? Do you understand what the FRS says, in terms of when you're preparing an account, in terms of the income statement, the balance sheet, the notes to the account? Yes, those disclosure. Do you understand what that means? That's what stage three is asking you. yeah, to focus on. Yes, those disclosures that you need to be able to pull, yeah, to make an account true and fair. Yes, yes, that word true and fair, yes, for accountants, well, hold on. Yes, you got to understand that, but not to, begin to worry about the numbers. Oh, well, depreciation has been passed. The income, is still questionable. It's not even complete. You're not sure whether the income is complete. Yes, whether we've captured all the expenses. That is not what stage 3 is saying here for us at Moracle. We are saying you focus on the statutory side of things. Okay, before you get to that, you got the schedules. You got to have schedules. So those schedules, yeah, is now where we really distinguish ourselves, and so many times, I'm talking to my fellow accountants. They say, well, hold on, well, I actually doing too much. Yes, I understand where they're coming from. But the reason why we're doing it, because we know that, scheduling is so important. Very important, guys. You cannot do accounts, you understand, without, paying attention to scheduling. And what scheduling is saying is every figure that we got in the statutory account, there's a breakdown for it. Yes. Because one, somebody is going to review that work. Somebody wants to know where these figures come from, the income. Yeah, where has the income come from? Where is the income, has it been reconciled? For example, if that company, yes, is now VAT registered, then think about it. The income that you got in there, the turnover, it needs to reconcile with the VAT return. So you put all the VAT returns together, yes, and the net income that you got in the total VAT for the year, it needs to tie up, to the turnover figure that you got in the accounts. Well, that is a reconciliation piece. A schedule needs to be prepared, which says, yes, I've checked to make sure the turnover figure is now agreeing with the total of the VAT net figure. Think about it, guys. And why is that? Because the VAT, yes, in stage number 1, remember, you were preparing this VAT based on the figures that has been posted every day, every week, every month. Okay? At the end of the quarter, that VAT, yeah, is produced from the numbers and figures and adjustments that you have done, yeah, every day, every week, every month, yeah, in stage number 1. Yes. So every quarter, you produce a VAT and file it with HMRC and make the payment. Yeah, second quarter, the third quarter, the fourth quarter. And now you are preparing the statutory account. Yes, okay, think about it. And that statutory account, where's the figure coming from? It's coming from the same system, the management information system that existed. So the statutory account, the numbers are coming from the management information system. The VAT returns are coming from the same system. So how can those two figures not tie up? Okay, think about it, guys. Well, you will say, no, sorry, they should tie up because they're coming from the same system. But hey, my experience will tell me that, well, sorry, yes, I've seen this over and over and over where the figures are not tying up. Yeah, okay. Scheduling will show that. It will pull it out. So your income schedule is telling you, well, hold on, I have checked for that to make sure that turnover that is in my account, yeah, is equal, and reconcile, to the, the VAT, schedule or VAT summary, I call it. Yes, you're gonna tie it up. And that is a beautiful, kind of scheduling I'm talking about here. Yes. And most of the time, you look at accounts, you see, well, hold on, there's no breakdown for turnover. There's no reconciliation for turnover. Yes. Those control accounts, you got control account that should go in the balance sheet. Yes. PAYE control account, VAT control account, all loans, reconciliations, all those control accounts sitting down there. Yes. Schedules are not there. Debtors and creditors. Yeah. Schedules are not there. You just see a figure. Yes. Last week, a question was asked to me, well, hold on, if you got, old outstanding debtors, and what do you do? Or all balances coming from previous period. What do you do? Yeah, in the schedule there. Now, for us here, we're saying You cannot have, a balance sitting down there which does not have a breakdown. You cannot. That's what schedules is teasing out. Yes? That balance we say creditor. Yeah, what is that balance? Can you break it down for me, please? Schedules help you to break it down. And the beauty is this, yeah, think about it, guys. When you are doing stage number 3, yeah, all you're doing here, you're just checking. Because if you think about it, yes, all of this breakdown, and analysis and stuff like that should have been done in stage number 1. Are you with me? Yes? Because that's what the month end is actually saying. Debtors. Have you actually broken down debtors, trade debtors, and other debtors? If it's trade debtors, who are the customers that owe us money? Then you look forward. Have they paid us? So every month you're doing that. So by the time you get to do scheduling, yeah, in stage number 3, that information already exists. It has been done 12 times or more than 12 times before you get to doing accounts. So all you're doing now, you're just pulling all this information in a certain way to back up your statutory accounts. Oh boy, this is lovely. I'm telling you, guys. Yes. These are the times, I say, well, I got my, my tea or my coffee, and I'm looking at those numbers, and what I'm looking at here, it's not just all this reconciliation, because I'm trusting that number 1, stage 1 would have done it for me. Yes, even though I got my professional skepticism hat on, I don't trust robot, particularly if it's robot doing it. I don't trust Shukesh. Shukesh, oh my goodness, no, I have to do double work. Jamie, no. I'm gonna check, So professional skepticism is all the time. I don't even trust myself. Yes, in a way. And we got to apply that, Let me haste to say that, not that I don't like you in person, but the profession says, no, sorry, I should not trust you. Yes? So I be skeptical. So when you give me those numbers, I got to check it so that I take responsibility and accountability. Yeah. So it's not like, oh, well, robots gave me the figure, that's why the figures are wrong. Oh, what? That's no excuse. Oh, Shukesh gave me those numbers, so that's why the numbers are not correct. So you take yourself out of the scenario. Sorry, not acceptable. You take full responsibility. It rests with you. But you got to apply professional skepticism at all times. But what I'm saying here is, I'm expecting Shukesh to have done it. So I'm not going to wait for Shukesh, to come to me and say, no, I'm going to send tea and coffee, to Shukesh. Hi, Shukesh, how are you today? I'm just checking to see if everything is okay. Do you need any support? Do you need my help? Yes, because I know that Shukesh, I want Shukesh to do his best. Because if Shukesh does his best, when I'm doing statutory accounts, now I can relax. Yes. But if you allow Shukesh, and send him, chocolate. I know Shukesh like dark chocolates, and pick up the phone and say, Shukesh, how are you today? You just don't care about, your colleagues or what is happening. Guess what is happening? Yes, okay. Uh, you cannot cheat nature. Yes, remember that. Yes, you cannot cheat nature. Yeah, so you're just postponing. Yes, the problem. That's what you're doing. And sometimes, when the problem is too much, and particularly those postponed problems, oh boy, you're not ready for it. Yeah. Then all of a sudden, you now frustration. So even if it's something that is as simple, because it's not been reconciled for a long time, it becomes a problem. Yes. Challenge, and then now all sorts of, emotions now begin to fly. Yeah. Okay. Well, I'm just saying to you guys, it's so important, yes, that you are focusing on stage number 3. If that's what you're doing, please, make sure, yeah, you're going back to stage 1 and checking to the people who are doing it. Yeah, particularly when we're in practice. I'm saying to my guys, yeah, I know that, Shukesh is doing this, or Jeremy or Mola or whoever is doing it. Yeah, let's go, and just check them out, from time to time. Yeah, and see what they're doing. Check their schedules and see. Oh, can you send me, what you're doing so that I can check? Yes. Sometimes just 5 or 10 minutes, it helps, to throw some light. But what you're doing, you're preparing, yeah, for an easy landing or relatively easy landing when you come to stage number 3. Yes. But scheduling are so important, guys. Yes. And when you come to scheduling, Yeah, this morning I was talking to my colleagues, and saying, you know what, I've got a clean template, for those schedules. Yes, because if you use a limited company, yeah, the schedule that you go for limited company is different, from a schedule which is a charity. Yes, okay, because limited companies are profit making. Yes, as we know. Yeah, and if it's a profit making, then the way the income statement is designed, yeah, it's slightly different from a charity, because charity is a non-profit. So the income statement, or what we call, if it's a charity registered, then the SOFA, yeah, the category, the way the SOFA is presented is different from the statutory, what you call it now, format for a limited company, which is profit making. So those schedules have got to be different. But also, it's not only charity against profit making. Even within, yes, different charities, they got different what you call it, objectives. Yeah, different activities as a result. So you need to be able to understand that. So when you're designing your schedules, yeah, you design the schedule specifically for the organization that you are actually working on. So that template is the template, but you got to design it. You got to, adapt it so that, it fits in the organization that you are actually working on. Oh boy. Yes. Really interesting. And that adaptation, my friend, when schedules have been adapted, this is where you lose, so much. I'm telling you, what you call it now, the essence, because people now just move things around, they cause all sorts of stuff, and then now the template now. Today I was asking, have we got a template, a clean template, and the answer is, well, no, so we'll go and find, but um, it's an interesting bit, scheduling. Yeah, in fact, I want to do a training, a couple of training, not one training, but scheduling is like everything else, you got to do more, yes, of those things. But I just want to draw your attention to it. Yes, you got limited company schedules is different from, a charity or non-for-profit schedule. And within, those categories, if it's a limited company, you got different companies or different businesses that are limited company, but they are different. Yes. So a limited company that is providing just service, yes, is different from a limited company that is, a manufacturing business, for example. Yes. So you cannot say, oh, well, I've just got one template or schedule, yes, for a limited company. Yes, no, they're different. Yeah. Or even if they are in the same industry, like for example in IT, you got some businesses under the IT industry, they're only doing the service. Yes. But then you got, other ones who are actually dealing the service, which is software, but also they got hardware. Yes. So they're buying and selling hardware and software, but they're also providing service. But they're all under the same IT company, the IT industry. So your schedule, yeah, got to be adapted. Yes, you cannot have just one, schedule, for all of this. So we need to understand that, guys. Yes. So that's what I'm saying again. Yeah, if you don't have full background information of the client that you're working on, how are you going to be able to do this, guys? Yeah, and that background information, as I'm saying, it's a discipline, it's a must, guys. Yes. The client that you're working on, you got to really understand. Because when you say statutory, it means by law. What does the law say? How we prepare accounts? Are you with me? Yes. And even they are in the same industry, yes, they might be different. And your scheduling needs to show that. Yes. So for a limited company, you got turnover and you got cost of sales and you got overheads. Yes. For a charity or non-for-profit, it says you got income, yes, and you got direct costs, and then you got overheads. Okay. Yeah. So you got to be able to now look at this and compare. Well, hold on, what's the difference? Yeah. So in a private company or shares or limited company, it's a turnover. Yeah. In a charity and non-for-profit, it says income. Yes. If it's a charity, it says income in resources. Yeah, it will say. And those income, yes, they need to be broken down into different categories. donations and legacies, charitable income, yes, trading income, other income, yeah. But for a limited company, you got one line there which says turnover, yes, okay. And even say, for example, if it's a company that has got different geographical location, you understand, then you need to now break that turnover into different locations. Are you with me? So you begin to understand, well, okay, I can see what is happening here. So if I understand that, then that means that my schedule needs to be designed, yeah, to pull that information. And I hope this is understood, guys. Yes. You cannot just prepare a schedule anyhow. That business, like I say, we have to be emotionally involved in that business. Yes, to be emotionally involved is to know this client inside out, what this business is about. Yes. And that's the beauty for me, in practice, and that's one of the things I loved about practice. And because after you've done this, I've done this for over how many years now, and I've seen so many different businesses, that you're involved with, oh boy, so I can paint that picture, I can see what I'm talking about here. And I want you guys, to do it. I'm telling you, you do it. If this is really what you want to do, yes, and every business is unique. Yeah, that's the secret. Every business is unique, and understand that business. And that background information will help you to tease that out. Yes. So the guys who are coming in, and you hear me talking about background information, okay, yes, this is what I mean. Yeah. So it's not only for stage number 1. Yes. Stage number 2, you need that. Stage number 3, so important, you need that. Yes. Even when you go to stage number 4, yeah, taxation, for you to be able to help your clients. Yes, you really need to understand what the client is about, the industry they operate, but also there are other external factors to do, for example, like with tax, yeah, and other, what you call it, stakeholders. Yes. How do you want to help your client to save tax if you don't understand about them? Yes. You are only just focusing about that business, yeah, business 1, yeah, but maybe that client has got different businesses that somebody else, another accountant, is dealing with. You don't know. You don't have a clue. It's all, that's not my responsibility. I'm just only doing this particular business that I'm appointed for. Yes, that's not good enough. Yeah, you sit down with the client and say, "I want to know about you." It's not only about this business. It's about you and the business. Yeah, and I'm telling you guys that background information when you get it. It's really, really, I'm telling you, it's juicy. When you get here, you can feel, like one exercise I do every morning. I go through the list of clients every morning as a kind of, that's my habit now. I go through the list of clients from 1 all the way down. Yes. And I'm looking to see if I can feel, you know, um, about a client, what is coming to me, you know. Some people say, well, hold on, Mola, I don't know, well, you are taking this to be too, but that's what it is. Yeah, you got to be, really emotionally involved because this is what you do. Yes, you want to help your client, you want to serve your client, you want to be there. So when I go through, I'm feeling them, in a way. Yes, and most of the time, I'm telling you, after doing this over and over, you begin to get it, and these things are all, where, for example, personal development comes in, the mindset training comes in, and all the psychological stuff that we're talking about, I'm sure we all have gone through this situation whereby you're thinking about somebody, and then the phone rings, and that person, yeah, is on the phone, yeah, the other side. Oh, I was just thinking about you, Shukesh, yeah, and you called. Yeah, okay. Well, how does that happen? It's nature. Yes. We cannot control that. So again, we can practice that. Yeah. But what I'm saying is it's about emotionally involved. Yeah. Genuinely connected with your client. Because think about it, this client, you're providing a service. And these clients, are paying you. Yes. And I'm saying when a client pays you, guys, let's take it serious. Yeah. It's a spiritual blessing. Yes, for a client to pay us. Okay, we are using our own talent, our skills, our creativity, yeah, for which we've studied, we've done so much work in practice, Yes. But we got the opportunity, and be gratitude, you show gratitude, be grateful, yeah, to be able to do that. Yes. And they will get something in return for it. Oh my goodness, that's super blessing. Yes. So for you to be able to do that and enjoy that money, I'm saying, guys, yes, you got to really emotionally involve in the client business. Yes. You got the technical skills that you need to understand and then hone that technical skills, but more importantly, connecting with your clients. Are you with me? This day and age, you hear me talking about, contact capital. Yes. And I'm telling you, it's so important that we are able, to practice. Yeah, there are people who know us, who believe in us, who trust us, and they know other people who trust them and believe them, and these other people know the people. Okay. Well, if these guys, yes, they believe us, they know us, they pay us, we've got a good relationship going, then you know what? We want something, then we can go and ask them. Yes. And then what they will do is they will just, oh, I know somebody. Yes. Oh, I know somebody. Yeah. But we first of all need to be able to serve them. Yes. And it's not an easy thing to do, to ask people. It's like when you're begging, that. But that again is a poverty mindset. When you think that when you're asking people, you're begging them. No, sorry, we got something to offer. Yes. The fact that we're connected, the fact that we are, in business, and we are serving them without any reservation. Yes, we can go and then do more, and ask them. But what I'm saying here, statutory accounts and scheduling, guys, is so really important. Yes, for stage number 3. Yes, if you are involved and responsible, wherever you are, to do statutory accounts, and please back it up with schedules. Don't just prepare accounts just like that, without adequate schedules. And those schedules, they need to speak volume. Yes, because when you get a schedule prepared really well and it's gone through, the internal control measure, yes, it's passed that for us in our case. Yeah, it means that if you got query, yes, from HMRC, you can respond to that query very quickly. If you got query from Companies House or so, you can respond to that query very quickly. If you got query from the client, you can respond to that query very quickly. If you got query from another third party like the banks, you can respond, to them very quickly. Are you with me? Don't waste time. Sometimes, the bank asks for some information, it takes a month or 2 to prepare that. Hold on. Why should they? Why should they? HMRC is asking, I want a breakdown of this figure in the accounts. And it takes you 2 months, a month, or weeks to provide that information. Why? Yeah, so again, think about it. Yes, you're coming back again to your schedules. Yes, if you build your schedules, and those schedules, you pay attention to those schedules, supporting every figure that you got, yeah, in the statutory account. Yeah, you're telling you can go and sleep, at night. Yes, and you sleep well. But when those schedules, that you yourself know that those schedules are not, yes, they're not tying up. Figures and numbers are sitting down there. It says, oh, that expense, or this balance sheet, particularly the balance sheet items. It says, oh, what's the figure there? I see a figure there called accruals. What is the accrual? It says, oh, it's a journal that is come, 2 years ago, and it's still sitting in accruals. So you are now preparing the account, and then you say, well, hold on, this is my accrual figure. It's a journal that was passed 2 years ago, and that's your explanation. I've seen schedule where people just go into QuickBooks or Xero and double click on the number, and then and just export into Excel, and all you see there is just journals. Yeah, no explanation for those journals, and those journals have been there for years. Yes, and nobody asked the question. That's not scheduling, guys. Yes, Okay, you might say that's the breakdown of the figure, but that's not good enough. Yeah, if it's an accrual, then you need to be able to say, well, that accrual relates to something, a service that we had received, yeah, but we have not paid for yet. And the reason why we not pay for that service is because we have not received the invoice from the supplier, yes, or the service provider. That's why it's an accrual, yes, but not a journal which does not have any explanation. And you say, that's my schedule for, for accrual. That's my schedule for debtor. That's my schedule for credit. No, sorry, that's not good enough. Yeah, guys. So when you do schedule, please do a proper schedule. Yeah, and it make life much easier. I'm telling you. So stage number 3, yeah, so important. Again, the heading there is statutory accounts. Yeah, meaning that you're focusing more on the statutory requirements. Yeah, it's not good enough, when you spend time preparing an account, the numbers are good, but then you miss out on the statutory, disclosure. I've seen accounts rejected so many times because, the statutory declaration or presentation is missed out. Yes. For example, companies that are now audited in the balance sheet, yeah, you got to make sure that it disclose certain exemptions, yeah, and it make reference to the Companies Act. Yes. Okay. You might have done the account, the numbers are okay, but if you miss that statutory declaration or disclosure, yeah, Companies House is going to reject it. And when they reject it, how does it feel? Yeah, for you, to have accounts rejected on that basis. Think about it. So that's why statutory accounts, yes, you focus, yeah, it's got to be, on the statutory disclosure. Yes. And even if those accounts, yes, were for audit purposes, then an account disclosure checklist, yeah, you need to now bolt that on. Yes. So checklist is saying, more like, have you checked for this? Yes. Have you checked for this? Yes. Have you checked for that? Yeah. So you now prepare the account disclosure checklist to make sure that those accounts that you prepared, they're complete. Yes. Really beautiful. Yeah. So important, guys. Yes. Stage 1, so important. Yeah. Okay. It feeds into stage number 3. Stage 1, make sure the things that are supposed to be done in stage 1 is done and on time. Then stage 3, yeah, you're just pulling that information from stage number 1 and all the schedules that have been prepared, the breakdown and all the analysis stage 1, yeah, and feed into stage number 3. And then focus on the statutory disclosure and presentation. Yes, backed up with your schedules. You are home and dry. Yeah, so that is stage number 3. It's easy to say because I can paint that picture now. I've done it over and over. You guys who are coming in or actually coming into this stage, and you got to do some more work. And I'm happy, as I say, we'll put some training, specific training, yeah, where we can see some things live. Yeah, but here is for you guys to paint that picture, the bigger picture. Yeah, and keep reminding yourself, what is it that is happening here in those stages? The Moracle Accountancy Formula, stage 1 to stage number 6. Yeah, do I understand? Yeah, and this applies to every business out there, whether it is a startup, whether it's a new business, whether it's an existing business, whether it is a multinational business, whether it's whatever it is, large company, medium size. Hey, yeah, stage 1 to stage 6. Yeah, so important. Are you with me? Okay, I'll stop here for a couple more minutes. If questions are here for me, please fire those questions at me. Yeah, thank you very much. Question time. Any questions, guys?
Oh, hello, Mola.
Hi.
Hello, thank you so much for this information. Yeah, just going to that stage 1, the last week's question. You have this balance you've traced it back, you want to take the, okay, to make a decision, maybe to write it off. What percentage do we follow the materiality concept to write off that? What exactly happens?
See, thank you very much, James. Yeah, see, I didn't say, you know, I didn't give you my what you call it now, the caution there. Please don't ask me difficult questions. Yes. No, I'm not joking. I'm not joking.
I know.
I'm not joking. Well, that's a very good question, you know, and you see, now materiality comes in. Like I was saying, yes, if that amount is material in the context of the financial statements, there's a whole standard that says when you are adjusting that, you think about prior year adjustment. Yes, okay. So I want you first of all to remember that a prior year adjustment is saying you're making an adjustment, you know, to the account, you know, for something, you know, that affected last year, and that amount is material in nature to the context of the financial statement. So you don't treat that lightly now. Yeah, this is serious. When an accountant says material, you know, in the context of the financial statement, so there's disclosure requirements that needs to be, so you can put it in the accounts. Okay. Now you're talking about percentage. You know how you're going to write it off. Well, again, this is where adjustments, you know, is got to be discussed. Yes, with the people, yes, who are dealing with the strategic decision making. Yes, because it depends. Yeah, say for example, if it's debtors, yes, you're trying to write off, and that debtor is material. Yeah, think about what is going to happen. Yes, the double entry for that, yes, for that debtor to write off, you are saying you're going to credit the debtor, yes, yeah, to write off the debtor, and then you're going to debit somewhere. What are you going to debit? So sometimes you're going to be like, probably, oh, it's a bad debt, you know, because we're not getting a debtor anymore. So that bad debt, because the amount is so material, then all of a sudden, you know, it throws everything out. Yeah, that business becomes, you know, a loss as a result. Yes, okay, so that business was a profit, and now because of that bad debt that you're writing off, it turns into a loss. Well, hold on, that's going to be you know, really, you know, difficult conversation if I was the CEO who was sitting down there, you know, and then depend on my dividends or my bonus, which is on a profit performance basis. Are you with me? Because at the end of the day, if that adjustment is going to turn the profit, you know, of the company, you know, into a negative, that means I lose my bonus. Well, you're gonna see how the discussion is you're gonna have, you know, some interesting conversation. Yes. Okay. Well, probably yes. That debtor, for some reasons, you know, it's not there. Yeah, all the evidence is pointing that should not be there, so we need to write it off. Okay, we can decide to write it off. But can we decide to write it off, you know, and stagger it, yes, over a couple of years, so that it does not affect, you know, the bottom line? Because it could be again that if we write everything off, yeah, then that profit turns into a negative. It might affect, you know, other facilities that we have with the banks, with other credit, with the loans, you know, because they see now all of a sudden we're providing or producing a statutory account that shows a loss. Yes, then, you know, it might affect, you know, our credit rating. Yes, so all of these things, yeah, are things that have to be discussed. That's why you don't just write off things anyhow. Yes, guys. Yeah. So whatever it is that you're writing, you want to see what the implication it has to the bottom line. Yeah, and also how does it look like? If you're writing off something, how the external stakeholders are going to look at this and evaluate it. You know, how is it going to affect, you know, our standing, our credit rating? So you got to be able to understand that. Yeah. So when you're recommending, yeah, a good accountant, you know, you're not going to say just write it off. You're going to look at it, so okay, what's the implication? Yes, particularly if it's material in the context of the financial statement. If it's not material, then yeah, that's fine, you know, and you can write it off, but still, you know, with the evidence, you know, there, because when you write something off, remember, yes, you submitted account for last year to HMRC, and HMRC has agreed with your computation based on what you provide to them. Companies have accepted it. And now you come in now and say, oh, hold on, this is a mistake, in a way. Yes? Well, we need to adjust the account, last year's account. Yeah, so now last year's figures, yeah, are going to be affected. So you're saying last year's figures were not correct. Yeah, that's why we're writing it off this year. So what's the implication? Yeah, so all of these things need to be discussed, guys. And for me, coming from the auditing heart, it always says, even when we're auditing, we're looking for those journals. Yes. So you find out that, it will be a big exercise, identify all the journals that were passed during the year for auditing purposes. And then we look at them and say, well, hold on. Yeah, these journals that were passed in the year in the accounting system, yeah, let's test them. What are we looking for? We're looking for proper authorization. We're looking for, the effect that it's got. Is there any intention? Yeah, because journals, yeah, is hiding quite a lot of stuff. Yeah, like for example, you see journal in the bank account. Well, hold on, a journal in the bank account? Seriously? Okay, just try and see how you can reconcile that journal. A journal in the bank account, yeah, in the QuickBooks or Zero. Are you saying to me that journal that you entered, you are going to tick it against the bank statement? So are you saying to me in the bank statement there will be a journal there as well for you to do your bank reconciliation? Yes? No. So one thing that you don't want to see in the bank, yeah, is a journal. Yes, you cannot pass a journal in the bank account, guys, because when you're trying to reconcile, you don't see the equivalent journal in the bank statement. Are you with me, guys? So you might say, oh, the amount is there, but no, it's not a journal. Yeah, it has to be what I call a solid, posting. Yeah, so guys who are, like posting journals, yeah, please don't post journals in the bank account. Yes, it's not a good discipline there. Yeah, okay. So all of these things are things that I say, make adjustments, watch it. Why are you making that adjustment? Yes, the implication that has got. Yeah, and don't just pass a journal because, well, yeah, the only way to pass. Yes, well, people will not know. Yeah, that's not good practice. Yeah. But yes, and that's why I'm saying, yeah, see, good question, because when you pass that, and you want to begin to think about, well, hold on, should I stagger it? Yeah, because there's so many other implications about it. Yeah, if I were to board of director, say you prepare a budget and say, oh, this is what we are aiming, yeah, to achieve at the end of the year. Yeah, and then all of a sudden, at the end of the year, are you telling me, well, we did not achieve that because we had to write off this one? Well, hold on. Yes, you can imagine the kind of discussion that will be happening, if I was there, so hold on. Well, I understand that, but, why are we doing it this way? Yeah, good question. Very good question.
Thank you.
Thank you, James. Yes. Any further questions, guys? Any questions, any clarification that you guys want to add? And that's what make accounting, very interesting, and but again, as I say, once you do more and you come across all of these things, you become second nature. Yes, you become second nature, and that's what makes you, who you are, the love for what you do. You enjoy it, and then you make a lot of money out of it as well. Yes, but you got to do more. Yes, as I say, the reason why, as I say, will give you the confidence to talk about these things. You should have done more. And I'm asking you guys, seriously, if this is what you want to do, yes, you got to do more. Yes, it's not just, oh, well, I've done some, that's it. Yeah, it's not enough. I'm telling you guys, you got to do more. Yes, and this question that you just asked, the amount of time I can picture that, James, because I've seen it over and over and over in my career. Yes, those adjustments. Yeah, over and over and over. Yeah, good, bad, and indifferent. Yeah. So the advice is more, guys. Yeah, don't be content with just doing some. Sorry, I've seen a hand up. Yes, Eunice, hello. Fire away. What's your question?
Hello, Morlai.
Hello.
Can I take advantage and ask a question for something off topic?
Advantage. Let me just make a note here. Advantage. Oh boy.
I'm struggling with something, and I thought
No.
I might as well take.
Oh, what? You know, you are allowed. You are allowed. You are allowed.
Thank you.
Yes. Go on. For the benefit of all. Yes. Are you there?
So if I have a situation, sorry, there's an operating lease.
Yes.
So basically it's a right of use asset, but the lease is for an initial period of 5 years, after which it will be extended 49 years if the party develops the land. Yeah. So in my first year, second year, what do I do with the amortization of the lease? Do I amortize it over 5 years? And then what do I do then when it's extended 49 years? Or do I just amortize it over 49 years with the assumption that I'm actually going to develop the land?
Okay. Very good question. A tricky one. Well, when it comes to lease, you know, and you always want to look at, you know, understand the lease, yes, a little bit more. But here, yeah, you want to now, you know, at the point in time that you're making a decision, is it, yeah, post the year end, or is it, you know, during the period? Yes, okay. And when you get this information about the extension, you understand, how reliable is that going to happen? Yes, because these are all the things, you know, because again, certainty, if this is going to be like, say, for example, it was 5 years that was agreed originally, and then all of a sudden you had, you know, more information which says, you know, this is going to be extended, you understand, and you got all the evidence, you know, supporting that extension, which means that original, yeah, is not okay. It was not okay. Yeah, then you're going for true and fair reason. You're going for, you know, the new information, which has got the evidence. Yes, because if the amount has not moved, you know, and then, you know, it's just a year that is now increased, yes, there must be a reason. There must be a logical reason for that amount to be increased. Yeah, and here, again, straight away, materiality comes into it. Yeah, this is not just, you know, well, 5 to 6, but this is 5 to, is it 5 to 49?
Yeah, 5 to 49 years.
Well, you know, straight away, you know, materiality kicks in there, because that amount at the end of 49 years, you understand, whatever it is that is going to be the liability, yeah, that is going to be, because again, if it's an operating lease, you understand, then what are you thinking about here? What is the effect that that is going to have in the balance sheet or the disclosure? Yeah, that needs to be. Yeah. So again, these are all the things that you need to. I think you want to, you know, look at, you know, at the point in time when decision is going to be made, whether it's during the year or after the year. Yes. Say for example, if it's during the year, yes, and or the decision was made after the end of the year, before, you know, well, reasonable period, because you got post balance sheet as well effect that you need to take into consideration before the accounts were finalized. Yes, is there any evidence of something occurring that has got material effect that the financial year that is just finished? If that's the case, then you still, you know, you're going to adjust. Yes, but in some cases, then if it's not, yeah, then probably you just a disclosure. But that is a material amount, you know, so then I think you want to do more. Whatever it is, look at the amount, 5 years, and look at the amount 49, and look at the difference there, you know, and say, well, hold on, well, what is this going to happen to the balance sheet? Yeah. But again, I'll ask the question, well, why that massive difference, 5 to 49?
It's a thing the government does in Uganda. If you're an investor, you have they encourage you by giving you a piece of land, but they say you need to develop it within 5 years, and that is a condition for you getting the 49 years. if you're not able to do any development on it for 5 years, then they take away the lease from you.
All right.
So now if they give it to you basically free of charge, and it's valued at maybe $80,000.
Yes.
So then you have this asset on your balance sheet, 80,000.
Yes.
But my problem is then, do I amortize it over 5 years or the 49 years, expecting that we're actually going to develop that piece of land?
We'll get. Let's talk about it. But I can see there is what you call it now. Maybe that could constitute what you call a change of accounting policy. Yes.
Yeah. Yeah.
It'll be pointing towards that, because if you got 5 years, which was what you agreed for, and then because of statutory or legislation, yes, you got to extend that, then that might constitute a change of accounting policy. Yeah, and in which case, yes, again, you got to follow certain protocols. Yeah, you don't just change accounting policy just like that. Yes, okay, it must be a reason, must follow certain, steps. But we can talk about that, so maybe I'll have to do a little bit more research on it, and then we can see. But yeah, but it's pointing again towards, a change of accounting policy. Yeah, which again, and if that's the normal practice, then acceptable. Yeah. But then you want to see the implication, yeah, in the profit and loss account, isn't it? Yeah, that's what you write off. Interesting. Yes, let's talk about that later on. Yes, in the interest of yes, let's not keep guys waiting here. We can talk that offline. Yeah. Any other question? I can take one question before we move on. No? Okay. Well, in that case, yes, want to just thank you guys very much. Yes, for your time again. It's good, that we're showing up. Yeah, but again, I'm saying, guys, let's go and put it into practice. Yeah, because as I say, I'm encouraging you guys to do more. This is about doing. Yeah. Let's try and see how we can close that gap between what we know and what we do. Yes, the knowing doing gap, I call it. Yeah, so guys, do more. Yes, put yourself in a position to do more. Yeah, scheduling, yes, very important. And if you're working with me, and I can see so many of you guys here today who are going to be, well, I'm going to push this. I'm telling you, yes. That's why I cannot wait for after this Easter, so that I can pick some energy to come and work on these schedules. We've got to get these schedules, guys. Yeah. And even this year, I suspect, I have a feeling that, what I'm telling you, because how things are going, we might get, our ACCA coming back again to visit us. Yeah. Remember, we are a professional practice, auditing practice. Yeah, for that matter. Yeah. So schedules, yes, so important. And, I'll give you a quick one. Yes. There's a difference between accounting schedules and auditing schedules. Yeah. You might just think of schedule is a schedule. Yeah. Okay. Now, there's a difference between accounting schedules and auditing schedules. So for auditing, you have the accounting schedules and you have to convert that into auditing schedules. Yeah. So again, yes, if you got accounting schedules in an auditing file, it's not good enough. Yes. Okay. I'm just giving some secrets here. Yeah. And that's why these things are so important, guys. So important. Yeah. But the foundational, yeah, I'm saying the foundation, yeah, is to make sure that we make stage number 1, yes, the management information system working for us. Yes. Even if you're getting involved in that, prepare schedules, guys. Don't just post it. Yeah. Invest. Yes. And making sure the schedules are there. Yes. Those month-end process. Yeah. If you get that right, when you come to stage 3, it makes life much easier. When you come to stage 5, auditing schedules, to turn those stage 3 accounting schedules to auditing schedules, sorry, that will be much easier. Yeah. But please, yes, if you get involved in preparation account, even in stage number 1, please schedules. Yeah. Work on it. Yeah. Thank you very much. And God bless you all. and have a lovely, lovely Easter break, you know, and those of us who are celebrating Easter, yes, and hopefully we got time to reflect, you know, and I hope the Easter blessings, yeah, is with you and your family, yeah, and I look forward to seeing you guys next week, fully charged, you know. Let's come back, you know, fully energized after our Easter break. And thank you. Bye for now.
Thank you.
Bye-bye.
Thank you. Bye.
Bye.